Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 28th of December. Dow Jones bulls eye the 20K mark again. All three major US equity indices finished the day higher yesterday amid thin holiday trading, with many markets such as the UK and Germany remaining closed. The Dow Jones Industrial Average fell short of reaching the 20,000 check mark once again, a level that the bulls have repeatedly tried to hit in the past month. Although equities slid when the Fed raised borrowing costs for the second time in a decade the last time it met, the setback was short-lived as it provided a better entry point for stock bulls. In the aftermath of the gathering, the index traded in a sideways manner, and in the last few days it has been oscillating between the psychological zone of 20K and the support of 19,880. Following the US election outcome, the index emerged above the downside resistance line taken from the peak of the 15th of August, and since then the price structure on the 4-hour chart has been higher peaks and higher troughs. Therefore, we believe that despite the latest sideways range, the near-term outlook of the index remains positive. A break above 20,000 will bring the index into uncharted territory. Considering that even a higher expected path for interest rates was not enough to discourage equity buyers, we believe that US indices could remain supported or potentially extend their gains in coming days as investors rebalance their portfolios for the next year. In our view, the speculative post-election euphoria that has engulfed equity markets is likely to continue for a while, perhaps until the specifics of Trumpenomics are announced. We believe that the biggest risk both stocks and the dollar face in the coming year is a potential market disappointment regarding the size and implementation of Trump's fiscal plans, as well as his ability to push his reforms through Congress. No data or numbers have been announced yet, which suggests that investors are discounting the impact of future fiscal stimulus without knowing how large that package may actually be or whether it will be fully approved by Congress. However, until such specifics are known, we expect any dips in the greenback to provide renewed buying opportunities. As far as the most commonly traded currency pair is concerned, this speculation, combined with the dynamics of monetary policy divergence between the US and the Eurozone, as well as the bloc's political instability, are likely to keep any rebounds in euro-dollar limited. The pair traded slightly higher yesterday after it rebounded from near the support territory of 104.25 and now looks to be headed for another test near the psychological zone of 105. Nonetheless, the broader path remains negative in our view, and as such, although the rebound may continue a bit above the 105 zone, we would expect the bears to take charge again at some point and aim for another test near the 103.60 level. A dip below that support would confirm a forthcoming lower low on the daily chart, and is possible to open the way for the 102 zone defined by the low of the 22nd of December 2002 and the inside swing high of the 10th of November 2002. As for today's events, during the European day, the economic calendar is very light with no major data releases on the agenda. The most noteworthy indicator we get today will probably be US pending home sales for November. The forecast is for the figure to have risen, so following the above expectations new home sales print for November, this could be another confirmation that the US housing market remains on a solid footing. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.